This program is brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. IG, where traders are made.
So in keeping with the theme of today, we picked JP Morgan collectively for the stock of the day ahead of its results that come through on Friday, US time. Its stock price is starting to come off the boil a bit after a run that started back in October 2023. Over the past year, its stock is up close to 42%. So while the Mag 7 get all the headlines, the banks have been doing all right. But in the face of uncertain geopolitical issues and sticky inflation, is it as good as it gets for JP Morgan? IG analysts expect earnings per share to go down about 2% for FY24. Let's get a view from my guests. Jess, I might start with you on JP Morgan.
I thought you were going to go age before beauty, but okay. So I think there should be a little bit of caution around JPM. So we do know it's the biggest bank by far. It's actually the 11th biggest company in the SPX. So they do report on Friday. So we are expecting revenue growth for the year of about 7%. That's not very attractive when you think of the other sectors that are seeing very strong double digits. Indeed, in some cases, believe it or not, some stocks outliers with triple digit revenue growth. But I do think if you are in this stock, maybe just be a little bit cautious. Think about considering, there's a tautology if you didn't know it. Think about taking maybe some profits off the table. But if you do have a look at the technical indicators, if you are into those, it is suggesting that it is starting to pull back. So just be a little bit cognizant of that. All in all, costs are a bit of a concern. So costs are picking up for the fifth straight quarter, and that's expected to continue. On the positive, investment banking fees are expected to go a little bit higher as well. But yeah, if you don't own it, I'm not sure why you'd be jumping in at these levels.
Okay. Got it. Thank you. So if you're in it, take some profit. So we'll call that a sell. Ted, JP Morgan.
Banks over bankers. I mean, this is a stock that is built for the bankers to profit, not shareholders.
Right.
That's my worry with it. There's also obviously a platform for Dim On to go and get on and talk about the world and get his attention. But I don't hate JP Morgan in the long run. I think there's ESG considerations there for sure. It has had a good run. I'd probably be somewhere else. I think that when you talked about costs being higher, I think this banks for bankers thing, there is going to be an increase in comp coming through there that is potential to derail, as well as spending on AI. They're desperate to then cut expenditure by spending on new AI systems, and I think that's not going to be a good economic efficiency in the short run. So I'm a bit worried about that for them. I'd probably rather look elsewhere in the US banking market, someone like a US bank core, as opposed to more of the investment banking model of a JP Morgan at this stage. So again, it's that sort of, I guess we said we're optimists, and here we are talking about negative. So we should be, we're saying, net interest income is going to rise, loan growth is going to rise. So there's a lot of optimism in the market out there, and here we are saying, what about expenses? How boring. So, I mean, I don't think we're going to see a disastrous launch to earnings with the banks being the place where it's all hit. So I think if they can deliver on that, then we need to see more deals coming through, we need to see more loan growth, and we need to see more net interest income. But if you tick those three off, then it should be okay. So again, I'm pretty positive on JP Morgan, but I think there's a better place to be in US banks, and I call it US Bank Core. I'm not brave enough to go Wells Fargo. I still think there's some organisation issues there, but that's the area I'd be looking at. Okay,
so if you own JP Morgan, you'd probably hold it, but you wouldn't be getting into it now.
I wouldn't be entering JP Morgan.
Oh, you wouldn't? Okay, then it's a sell. Got it.
Sell, yes, sell. Everyone sell.
All right.
I think I just went a full 180 there, but anyway.
All right, I'll keep you on track. And that was the stock of the day.
This program was brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended hours on key US shares and competitive spreads. All on an award-winning platform. IG, where traders are made.